Welcome everybody, it's Dan Latto speaking. I thought I'd go live. It's really early this morning, 9 o'clock in the morning here, 8 o'clock UK time. Anyway, woke up this morning, checked my email, checked through Twitter, see what was going on, nothing on there. And then went to metro.co.uk, thought I'd have a look at that and saw that the news that the Bank of England has dropped the interest rate from 0.75% all the way down to 0.25%. It's really interesting for me because I called this last week. I said with coronavirus and everything going on, it's going to hit everything pretty bad. And we expected a drop, and this morning we've had it, but we didn't expect quite a large drop, which kind of shows me the severity. You see, there's something that the government says, and then there's something that the government do, and these are generally two different things. Okay, so when Boris says everything's fine, just wash your hands and let it go through the nation, like that's just the government saying stuff, but in the background they're putting stuff in place to cover themselves, not other people, i.e. an interest rate cut. So dropping from 0.75 to 0.25 kind of shows to me the severity as to how the government is expressing themselves with respect to the economy. They think it's going to hit the economy quite hard, and I would totally agree. So there's a couple of things I want to say about this because it's really important, because I know a lot of property investors have been investing for 5 or 10 years and they've never had, 2007, 2008 when it hit and it all went to, it hit the fan. And so they've had historically low interest rates, and now we're going, well, look, it's dropped even more. This is not normal. And that's the point I'm getting at. This is really not a normal thing to happen to interest rates. This happened again at the end of 2008. One of my mortgages went down to 7p a month for interest only, and one mortgage went to 9p interest only, which is really interesting. But this is the thing. This is not normal. So depending on how much money you've borrowed, you can't just take the savings here and go buy a new Porsche or a new BMW or a nice holiday and any of that stuff. Be sensible about the money that the interest rate cut is going to give you, because this is not a permanent solution. I reckon this might be 3 to 4 to 6 months max. That's it. And then interest rates will go back up to what they were now. They might creep up at 20.25, a quarter point. But right now, enjoy it, take it, but don't enjoy it, but using that money to buy meals out, buy fancy new cars, get further into debt, pay down your debt. Use this money, it's free money, use this money to pay down any debt you've got. That might be credit card debt, it might be loan debt, it might be a car loan. You should be debt free. Cars, credit cards, loans, they're all bad debt. You shouldn't have bad debt. That is the bottom line. It's not normal, or let me rephrase that. It is normal to get a car loan and to get into debt, but it's not the right thing to do. Just because the majority of people do it, it's not the right thing to do. Take that half a point interest rate cut, put that money into a spare account and use that to either buy some shares that are going to give you dividends, 6%, AT&T, whatever that's going to be. But just don't go out and spend that money on stuff that is going to be wasted. You want that money to be able to be used again and again and again. And one of the reasons I invest in stocks and shares, for example, as well as property, is that I'm a dividend investor. So I invest for dividends. I get paid dividends from AT&T, for example, every quarter, and it's about 6% a year. So if you're saving £10,000 over the next 6 months based on the savings of your interest rate, it's not a lot of money, but £600 a year, every year till the day you die. And you can, depends on what the wrapper is around the stocks and shares. It might be in a pension fund, it might be an ISA, but you can pass that on to your kids, and then they get to benefit from the fact that there's an interest rate cut in 2020 of 0.5%. So it's kind of historic, and it's historic from an interest rate point of view, but it should be historic for your family's future. Look at me, I'm pointing because I'm getting really excited. This is kind of a rant I've been waiting for the last 5 years, and now we've got it. We're going to milk it. So get the interest rate cut. Just be really, really sensible about it. Let me know what you think in the comments below. If you're not in the mastermind group, by the way, then you should come and join me in the mastermind group. I go live 3 times a week. Mondays is the business growth show. Wednesdays is the property cash flow show. And Friday is the mindset and hustle show. We go live at 12 every Monday, Wednesday, and Friday. Come and join me for that. It's in the mastermind group. The link's down below. If you got any comments, let me know that too. Zed is just saying, yeah, pay off debts. 100% pay off debts. Let's talk about that for a second, and the normalcy of having loans and credit cards and car loans. Like, that's normal for most people. It's not normal for millionaires. Okay, millionaires, they've got credit cards, but they've got zero on it. They've got a 20 grand limit, but they don't use it. Like, they use it just to keep the credit rating up, but they don't keep something on it. Car loans, actually, they generally lease their cars through their business, and it's a tax write-off. That's how most millionaires do it. And if you're not there yet, you shouldn't be doing that. And if you're having to, or rather, if you're having to get up and go to work, what are you getting a car loan for? You buy £1,000 Nissan X-Trail, that's your lot, until you can afford a better car, or you get a better job, or you become self-employed, or whatever that happens to be. But you shouldn't be having debt. You shouldn't be carrying debt. It's like kryptonite around your neck. You know that film, Superman, the first one, 79, and he's got kryptonite, and he's all weak and non-powerful, because that's what debt is. It is kryptonite around your neck, and you've got to get rid of it. So where were we? Credit cards, we talked about cars, and then loans. Like, wealthy people don't do loans. And if we do loans, it's because we're taking a debt, or we're taking, say, 100 grand that's got interest rates attached to it, and then we're using that debt money, okay, to invest in something that's going to give us more money back. That's the only reason we get loans. Like, you know, we might be applying for Funding Circle to buy a business, for example, and that business will generate more cash flow. That cash flow enables us to buy a loan, to buy the business. But we're not getting a loan out to buy some clothes, or retail therapy, or a coffee because you're depressed, or a holiday because you're depressed because you're in debt. You know, it's this self-cycle. But the interest rate cut is important for you, but you've got to use it right. Don't just blow it on a night out, a nice new car. You know, I see this. People get pay rises, and it's like, oh, I've got an extra £1,000 a year. Well, first of all, an extra £1,000 a year, take 3% off that for inflation, and then take 30% off for what's tax? Well, it's 22% plus national insurance. It's 30% right there. So you've lost a third of that. £1,000, that's 650 quid. I can do this. I can work this out. It's about £11 a week. Well done. And people are going out and buying brand new cars, or new cars, or changing cars because they've got a pay rise of £1,000 a year. And actually that translates, if you're a lower rate taxpayer, of £11 a week, and they're buying new cars. What you're doing is crazy. Pay off your debt. You should be debt free. If you, like, by the way, I wasn't, so this is hypocritical here, but you need to be debt free by the time you're 30. And if you're 18, do not get a credit card unless you're getting it to build up your credit. So you put little bits of money on it, your petrol spending, it gets paid off in full every single month, or you put your Netflix payment through it, and that gets paid off every single month. So you're getting credit and you're paying it off, getting credit and you're paying it off. That will work really well for you to increase your credit ratings. But unfortunately, and I had up to £80,000 of credit card debt. 80 grand. I mean, that's just beyond crazy. And I got into real trouble with it as well. So it's crazy. And yeah, we bought a house with some of that debt and we paid that card back off. But then the card just crept up again. You just put little bits on it and you need to pay it off. And it's really, really hard unless you're really disciplined about it. But you've got to start paying down some of those debts. Well, we mastermind group. Okay, that will do us for now. We're live again at 12. Come and join me for that. And we've got a Property Cash Flow show today. Hope you can join me. And we'll speak to you then. Have a cracking day. And we'll see what today brings. Speak to you at 12. See you later.